Hi everyone, this is Rohit from Lifestyle Mastery, and I'm excited to have Aabhas Khanna, who's a general partner at MyAsia VC, which is a venture syndicate and a fund with $125 million in AUM, backing more than 250 companies, including 5 unicorns. Aabhas was previously at HSBC and Deloitte, and he now invests in pre-seed and seed A&A startups across enterprise, healthcare, fintech, and manufacturing. Welcome to the show, Aabhas.
Thank you, Rohit. Thank you for having me. Excited to be here.
Awesome. I know the other partner, which is Sajid Rahman, who's come on episode number 143. We'll put on in show notes. But I'm really excited to know about your journey because you worked at global enterprises like HSBC and Deloitte before you moved into this crazy world of venture capital and angel investing. So how did that? How was your experience in HSBC and Deloitte, and what made you transition into this world of venture capital?
Sure. No, thanks again. Yeah, that's a fair question. So I started my career in a back office in India. So it was the year of the recession. Managed to get a job, and around me, I saw a lot of really enterprising folks who wanted to do business, had great ideas, but did not have access to capital. Roll that few years forward. I was at HSBC in London, and I was in running mid-market leverage finance, where the bank essentially provided funding for leverage buyouts. And there I, essentially saw the world of deal doing, where, the banks and, back then, mid-market private equity was supporting entrepreneurs with capital. And, I just seeing that, executing deals made me realize that, I can do that for folks back home, but with capital that potentially I had. So, I always wanted to work with people, smarter than me, hungrier than me, and solving hard problems. And that experience that I had working with founders in the UK helped sort of connect the dots in my mind. And I sort of jumped into the world of startups around 2019, 2020. Back then, obviously, the ecosystem was, developing. You had a lot of the syndicates out there, which were essentially providing access to capital, as well as, I'm a cold caller on LinkedIn. So I managed to, reach out to a couple of people using my alumni network. So both in terms of, so I went to Sri Ram College in Delhi University, as well as, my overall ecosystem that I had built relationships in the network. And I managed to find a company called Adonmo, which was my first investment. These two young guys who were, just trying to transform the world of advertising, using a mix of hardware and software by putting, large screens on top of taxis. And, essentially, if the taxi is going past a school, the screen could show advertising targeting, families or mothers and children, right? So that was the idea back then. And I was instantly intrigued, and I wrote my first check, and that started my journey of angel investing. And since then, I've sort of continued on my learning process, trying to meet and interact with as many founders as possible, and have been very privileged to now partner with more than 150 companies. Through the course of my personal investing journey, I met Sajid. So again, it was all serendipity. So there was a company that I was looking to partner up with, and the founder introduced me to Sajid, saying that, hey, Sajid is running the syndicate. Maybe it makes sense for you to invest via that entity. And I interacted with Sajid in 2022, and he was building MyAsia VC. And since then, we started scaling MyAsia VC, and now very, very pleased to say, we managed to support more than 250 companies across 17 markets now. It started off initially with the ambition of supporting Asian origin founders, as the name suggests. But we've essentially been founder-led. So whenever we get the opportunity to work with extremely smart, driven, hungry founders, we just take the opportunity to participate. So that's a sort of short background as to what got me kick-started.
Got it. Super interesting. Because before the call, we did chat about some of the AI infra and AI companies that you're backing. But given the hype, the cycle that we are in, how do you separate that sort of signal from noise? And what's your framework for evaluating whether an AI startup has genuine defensibility versus they're just an AI wrapper?
True. No, every day is a school day, right? The technology is moving so rapidly. In our case, we started investing in AI before it became sort of a hype. We've been now, investing in AI companies for more than 2 years, and we've had our fair share of learnings, right? So I think the way we have looked at the entire stack, right? So if you look at the entire sort of AI stack, you have the foundational layer, which is the compute, where you have the semiconductors. On top of that, you have the data centers. Then you have the models. On top of that, you have the dev tools, and then you have the consumer apps, right? So what we've tried to do is we've tried to essentially look at foundational companies across each of these layers, and then try and identify those founders which are extremely strong with the technical background, which bring a very unique insight to the table, right? And at the same time are targeting large markets. And in a lot of cases, we go after those founders who are solving a problem for themselves, right? So I think that is extremely useful and beneficial for us, right? So as an example, we invested in a company which is building foundational models for diagnostics, right? For radiology. So just taking that reference, right? So the team was a bunch of scientists and ML researchers who were based in the UK and were researching COVID, right? And as part of their research, they identified that chest X-rays have a wealth of data and can actually help diagnose people a lot faster and better and result in better outcomes for humanity as a whole. But nothing existed, right? So as soon as sort of COVID ended and these guys thought the time was right, they quit what they were doing, and 4 of them came together and started building on this particular problem. So to sort of circle back, mission-oriented teams who are looking at a large market, which is, say, healthcare, which is global, at the same time bringing a very unique insight to the table, again, having gone through the process and seen the problem, as researchers in the field, and then at the same time going ahead and having obviously a foundational prototype, something that demonstrates what the product really is. So that is a sort of a rough example of how we, of an example of a deal that essentially we looked at. But if I was to just take a step back and give you a framework, which is what you specifically asked for, in the stage that we operate, essentially 3 things is what we fundamentally look at in the pre-seed and seed stage, to clarify. First is the team, right? So, if we find a team which is extremely talented, with high integrity, focused on execution, and with a high degree of emotional intelligence, i.e. they can build a strong team around them, I think that is an ideal mix, and that essentially is something that we are very naturally attracted towards, and we spend a lot of time essentially discussing and understanding the motivations of the team, the timing, and what sort of essentially drives them to pursue the exact opportunity that they're going after, right? It's a 10-year journey, right? So the intentions need to be sort of aligned. So that is extremely important. The second thing that is critical is the market, right? In our experience, when we first invest in a company, the idea almost always changes, right? There's never a situation where, maybe very rare instances where the idea that we invested in is eventually the idea that culminates into a successful outcome, right? The ideas change, but the market that people are essentially going after, right, that to a certain degree changes, right? As the saying goes, right, the best founders increase the market size, right, by adding more features, etc. All of those are there. But if the foundational market is large enough, and that gives us comfort that there is an opportunity to go ahead and build something in the space, that is something that is naturally appealing. On top of that, then there are certain aspects that we might take from a sector perspective, like, okay, if it's a regulated space, how hard it can be to build something there, what can be the potential differentiation. If it's a consumer sort of play or a consumer tech play, how deep is the margin profile of the business, because you will have to spend to acquire customers. So after you sort of define the broad overarching umbrella of the market, Then we go down and we look at the specific nuances of how the market operates based on the specific customer group that you're targeting and the specific problem that you're solving. So that's the second criteria. And the third piece is essentially, are we pricing for risk adequately, right? In most cases, one might argue that, ventures, pricing for risk is very, very difficult because in most cases, it's just a finger in the air sort of a approach. But I think when I mean pricing for risk, I specifically mean how the company is trading at a particular point in time in terms of, do they have any initial validation, any traction, any sort of customer, insights that they've managed to validate that the problem that they're building is of significance. And then in terms of their execution prowess, their capabilities, if they're seasoned entrepreneurs, repeat entrepreneurs, etc., are we pricing the deal to the best extent that we can deliver returns to our LPs? So I think these are the three key parameters that we look at when we are evaluating a deal. But no two deals are the same. But I think the proportion of each of these might differ. But I think this is the foundation on which we start thinking about a deal. And then from there, we go ahead and see, what is it that aligns with our overall strategy and portfolio construction.
Got it. Super interesting. Because, you're based out of Hong Kong. So what structural advantages or challenges do you see for founders building there versus be it Bangalore or Singapore, Dubai, or Silicon Valley?
Oh, that's a loaded question, right? Because all four of these regions are very unique, and I've had the privilege of sort of working across all of these in my professional as well as investing career. I think the number one challenge that at least that I'm seeing out of Hong Kong is the markets are sort of limited in the sense you have certain sectors which are deep and large in Hong Kong, like financial services is extremely, has a very strong foundation here. The government is doing sort of fantastic initiatives in deep tech, specifically focused on biotech and medical. So lots of good companies in that space coming out of Hong Kong. Web3 also has seen its sort of fair share of companies like Animoca, etc., coming out of the region. So I think if you're building in any of these sectors, I think Hong Kong is pretty good. But then if you were to look at more traditional plays, I think that's where it gets slightly tricky. Like, if you're looking, because fundamentally building a business, say for example, if you're building an AI business, right, you need the right mix of talent, you need the right mix of customers, you need the right mix of even, for example, infra, right, to try and build the entire ecosystem play. It takes a village to build a business, right? There's a team, there is operators, advisors, the overall ecosystem, and that's what makes, for example, Silicon Valley, right? You can't beat the ecosystem that they've sort of managed to sort of evaluate. The risk-taking potential, I think, is the most critical differentiation that Silicon Valley brings in the entire world, right? Which is why venture was born there, right? Because people have the ability to back really, really ambitious ideas, and I think that is one thing that really differentiates Silicon Valley versus, say, a Hong Kong and a Singapore. Again, when you go to markets like Dubai and Southeast Asia, right? I think the core reality is all of these countries are in different stages of evolution, right? So you can say that if you were to draw all of them are on a chart, right? So if say Silicon Valley is up here, India is here and rising up rapidly. Southeast Asia, certain countries might be slightly behind, similar to Dubai, right? So I think all of these are in their different journeys, and I think we need to, at least when we look at companies, we look at it from that lens. So right now, we are investing in, say, the Middle East. We just invested in a neobank in the Middle East, right? Which is essentially trying to build a bank connecting the 17 sort of, I think there are 17 countries in the Middle East and GCC, which bank together. So how can you build a regional bank? Because trade is now booming within that region, right? So we are looking at more fundamental bets in Southeast Asia and Dubai, like, you're looking at banking, logistics, more around enterprise plays, where we know the markets are deep, right? Those are the kind of plays that you would be looking at if you were looking in those markets. If obviously you're looking at more foundational, cutting edge technology, you would probably look at India and say the US, because you have that talent, as well as now India even has access to lots of domestic capital, pools of capital, which has been earmarked by a lot of the domestic funds which are there. And in Southeast Asia, again, I think the play is looking at those companies which are solving for regional problems, right? So I think that is extremely, extremely key, right? So if you're building something which can again drive outcomes not only for one particular country but for the entire region, right? And we've made our fair share of mistakes, right? So for example, we invested in a fintech, which unfortunately the company did not end up raising a follow-on round. But the key insight that we learned there was working capital cycles are extremely long in countries like the Philippines and Indonesia, right? So in some cases it can take 6 months for you to get your receivables, which makes it extremely hard for a venture-backed business to scale, right? So those kind of systemic issues will take time to sort of mature out. But I think we're all in the right track, right? All of these markets are sort of in different stages, and the sectors across these are again pretty diverse. From our perspective, again, we try to look at it from a supply chain durability standpoint, right? I think ultimately a lot of these countries are still dependent on the baseline sort of infra and businesses like logistics, consumer, etc. And right now we are only looking in those kind of plays. And then probably in the next phase would go into looking into more sort of deep tech technologies.
Got it. And about in India, I've seen a lot of SaaS founders would start from India and then maybe go to Silicon Valley and expand from there. But how do you evaluate, the TAM in the Asia's, fragmented landscape? Do you place bets on those founders who look at a multi-geographical expansion from day one, or are you comfortable with a single marketplace initially and then they're looking to expand later on?
I think it's a mix, right? It depends on the market that you're going after, right? So, for example, if I am looking at, say a regulated market, say financial services, right? In that case, I would prefer to look at companies which have deep local TAMs, like in the sense, if you're going after India, India has deep pockets. It's just so many of us, right? So there is that ability to spend and capture and build. But ultimately, I think again, it's a factor of what is it that the market needs, right? I think that's the key thing to look at. Like for example, we invested in a business which was building fintech, right? In the Middle East, again in Dubai. And after a year, the founders realized that there is no ability to monetize. And the key insight that they learned was that customer service was a huge problem across businesses. So they decided to pivot, and they shut down their financial services business, and they built an AI customer support business, which they are now scaling, right? So that is an example of how a business really converted. So I think TAM is, going back to my point, right, that you go after large TAMs and you try to think of it as a large market, but founders eventually, I think go where the market and the customers send them. Ultimately, finding a customer that you can pay for is golden, right? That's the most important thing. But trying to pinpoint and identify takes a lot of time, right? So how do you try and identify a customer set which is homogeneous across markets? If you can do that, it's amazing, right? But it's very difficult to do. But just to answer your question again in particular, it would depend on the kind of sectors that you're going after. So for example, to your point, if I am a hedge fund industry, right? Yeah. Hedge fund industry, if you were to look at it, how it's structured, right? Most of the hedge funds started off in the US, right? And then started building offices in different parts of the world, right? So if you were to look at that market, right, it doesn't matter if you are based in, say, a Dubai or a Singapore or a Hong Kong. high chance that the capital flows and the decision making is happening in the West, right? So if you are building a business from the US which can cater to all of these other geographies, then that is also a very interesting play, right? So in that case, how do you value the TAM? It's a multi-billion-dollar question, right? But that's where the founders' focus and clarity comes in as to how they break it down and they identify a specific go-to-market model which can potentially go and serve the company in the US and then have a downstream implementation across various different countries. So that's how we look at it. It's again, it's not a science, it's an art, right? And fortunately, because I've worked in cross-border businesses, I think there is this there's a framework that I use. It's called the 5 why framework, right? You keep on asking the founder or whatever why 5 times, right? So if you're, for example, I want to target the hedge fund industry. Why? Because it's right now it's complex and large, but there is an opportunity to build something there. Why? To drive efficiencies and to reduce costs. Why? So then that can deliver a better customer experience. Why? So then you can potentially monetize it. It's sort of a 5 why framework to sort of come down to the core question that the founder is solving, and it's basically to try and understand first principles thinking, right? Those are the kind of insights that we look at when we are speaking to founders, just to understand a little bit more about how they are evaluating, various trends, insights, or even what they've learned from their customers.
Super interesting. And obviously, since you've invested into a lot of portfolio companies, how do you look at reserves and follow-on investments? Is that a systematic approach to keep a reserve allocation to double down on the investments which are doing well?
So because we've been a syndicate thus far predominantly, right? Most of the investments we typically go back. We double down maybe once. So we go back to our LPs who invested in them earlier, and then we all sort of partner up into a follow-on check. From a fund standpoint, like our rolling funds that are currently available, there we typically write just initial checks. Again, if you were to look at venture, different fund managers have different thesis. Some like to keep follow-on funds for doubling down, whereas some just write large checks in the first sort of instance, and then just support the founders through. I think for our current sort of funds that we've done, it's been a mix. So our rolling fund sort of doubles down, and our YC fund currently, also considering the YC fund started only in 2022 when sort of I came on, so it's still early, right? So we've doubled down only a few companies. So hopefully we'll start seeing follow-ons, and when those happens, I'll probably be able to give you a more definitive answer. But we have earmarked some capital for follow-ons. But yeah, probably need to think about it a little bit deeper on the kind of deals that we get, because I think a lot has changed from 2022 to 2025, right? It's also trying to understand whether we try and use that capital for taking new bets or just following on. So we go back to our LPs and have that conversation and then take a call accordingly.
Right. And about MyAsia VC has backed more than 5+ unicorns. So are there any pattern recognition that you have developed which lets you identify this is going to be a future unicorn for you?
It's again a great question. It's all founders, right? So for us, we've in the standout trend is the founder quality and the ability to just execute. It's ruthless execution. By founders who are just extremely focused, right? And are just out there to prove others wrong, right? I think that's the clear sort of trend that at least we've seen. And then I think also, the ability, I think one very important trait is the ability to build teams. I think, and it's not only about, attracting talent. That is absolutely crucial to get the right people with you in the journey. But it's to try and identify what is the right way to grow your team, right? It's very different for a company pre-PMF to hire talent versus a company that has potentially, shown signs of PMF and then growing from there. it requires a different kind of talent set. It requires a different kind of strategy, right? Because you may be potentially moving on from, having dedicated, engineers to more of a sales sort of process, right? And also those founders who can, initially the companies are predominantly founder led, right? Most founders are doing the sales themselves.
Correct.
Can they then convert and build a process to translate that into having a fantastic sales motion and translate all that knowledge into systems and processes downstream? I think that is extremely critical. Again, I'm a business person, so I talk about all the business aspects that I see that distinguish companies which have succeeded versus those which potentially haven't. Secondly, I think one thing is those founders who are not too precious with the product that they've built. I think that is something which is also extremely insightful, right? Those people who are focused on the problem itself and don't get married to the product, I think end up delivering outliers, right? Because they're constantly questioning the ability of the product to solve a particular problem rather than looking at it at their creation and going like, wow, this is so good, right? I think that mentality shift also sort of drives a fair bit of differentiation within the founders. So I think, I think those are some thoughts off of my head.
Oh, interesting. And you've been investing in AI startups which are building, the future of enterprise growth. But do you think about the disruption risk to your portfolio where, AI might commoditize what, current winners are already building? Like OpenAI is, really churning a lot of features every day. But what are your thoughts on that?
Oh, it's a thought that we are constantly dabbling with. It's a constant risk, right? Technology risk is very evident in every company that we've obviously invested in, because so I think it's a call that every founder has to take, right? Whether they accept the fact that, okay, if they're building something, it will work in the new world, right? In a profitable manner, right? And deliver the kind of growth that would be able to potentially either allow them to grow profitably, or if they're raising funds, would have the right metrics to attract capital. I think founders have to take the tough call to realize what their business model is and will it survive. If they feel that they can, or the business model requires a change, what is the next best thing to do, right? A pivot is extremely difficult, right? People say, I don't know if you've seen Friends, right? And they're trying to pivot the couch up the stairs. That's exactly what it is, right? So you think that a pivot is something that can be done, but the reality is you always have optionality, which creates a lot of confusion, right? Because you have multiple paths, but how do you choose the right path? So I think, right now, a lot of founders are standing at this juncture where they are looking at these various parts. And as an investor, our job is to try and potentially work with them to take decisions, ask questions, so they can take the right decisions to steer their business. I think that is the most important thing that we focus on. So as an example, right now, we had one of our companies in India which was doing SME lending, and overnight the regulations changed, and frankly the business model just got wiped out, right? Because the Indian government changed the regulations, and the founders had grown the team, they had raised follow-on funding, and we were in a massive dilemma. What do we do? We spent a lot of time with the founder, and unfortunately, the founder had to take the hard call that they need to wind down operations, because there is really no way for them to survive. In the business model fundamentally cannot scale based on the new regulations that have been incorporated by the Indian government. So at that point, what does the business do, right? Do you continue running the business and think about what is it that you can change, and then try and relook at your model, or you try and minimize losses, and you cut down and you go back to the drawing board. In this case, because the company was early, so they decided to go back to the drawing board and evaluate what they're doing. But again, as investors, our job is frankly just to ask questions and hopefully, get the founders to arrive at the answers which can help them untangle some of the problems that they are wrestling in their minds. It's a very lonely journey being a founder. Our job is, if we can just try and help them detangle some of the challenges that they're going through, connect them with the right sort of advisors, or even insights that if we have some, or if they're raising capital, then connect them with follow-on capital. That's why we exist. And I think at its core, it doesn't matter if it's AI today or something else tomorrow. From a venture standpoint, I think the core stays the same and our ethos stays the same.
Right, and Aabhas, when it comes to traditional SaaS metrics, it emphasized that revenue growth coming from seed-based pricing and all that. But in a world where companies like Lovable and all are getting to $100 million in ARR in the shortest of time, where AI can compress those sales cycles or that entire workflows. So how are you thinking about good growth? What does good growth means for you and for MyAsiaVC, and when would you want to bet on the founder?
Again, I think as long as grow, it depends again on the sector, right? So all of these companies that you're referring to, they're going extremely fast, also based on the customer that they're serving, right? So if you look at it, most of these are consumers, either developers or individuals, right? So the kind of customer that they are targeting has a very different profile. We do a lot more enterprise businesses. Enterprises businesses by nature have a longer sales cycle. They take a sort of a longer time to convert, but when they do convert, they are sticky. So the metrics for us are slightly different. So we try and benchmark the companies that we are investing in against industry metrics to see if they're stacking up against those, right? Obviously, you want the companies to grow rapidly, right? The days of 3x growth, are no longer relevant in the age that we are living in. You want companies to hit growth rapidly, and obviously if we can find those gems, fantastic, right? That is what makes the good investors great. But at the same time, I think that there would be a time when all of this froth dies out, and there would be companies which are solving fundamental problems which would stand out. So I think we are taking a bet across the board, right? We are seeing companies across the portfolio performing differently. For example, we invested in a company which is building AI to solve bug reviews, right? So initially the growth was a little flat, but when the founders hit early signs of PMF, they've grown very, very rapidly. And from now on, it's now that we are looking at the metrics to see, okay, what is it that they need to do to hit the Series A goals, and I think hopefully touchwood they'll be on target to hit that. So yeah, depending on the kind of industry that you're going after, depending on the sales cycle, depending on the kind of overall underlying margin profile of a business. Again, we are more fundamental business thinkers in the sense, it's not only top line. If there is a founder which is focused on sort of balanced growth, I think that also makes sense. It really, really depends on the kind of business model and the kind of sort of sector that they're targeting. There is a lot of noise. I think as an investor, the biggest challenge is to just try and take the noise out and look at a business in isolation on what it can and cannot do. I think that is the hardest challenge that we as investors at least have to grapple with.
Correct. And when it comes to venture capital money, especially when it comes to the Asian ecosystem, so where do you see the institutional capital flowing into early stage Asian tech? Is it from institutional money, or is it predominantly family money and high net worth individuals who are putting more into early stage startups?
I think Asia is going through its own wave, right? So India has its own sort of domestic capital ecosystem. So just so I'm clear, so the question that you're asking is targeted on India or Southeast Asia or as a whole?
As a whole, could be Southeast Asia, India.
I think all of them are going through their own sort of share of cycles, right? If you were to look at sort of Hong Kong, where I'm based,
Right.
A lot of the capital comes from family offices, corporate VCs, and sort of sovereign funds. A lot of funds coming in from family offices in China, which are sort of now focused on growing the GBA, which is the Greater Bay Area. So that is what a lot of capital, we're seeing a lot of capital flows happening in that sort of belt. If you were to look at, again, places like Singapore, etc., which is currently raising money, Singapore is seeing a lot of money coming in from family offices, from corporates, as well as professionals, right? Because Singapore has seen a boom of high net individuals over the last couple of, say, decades, right, who made their money and now they're sort of recycling capital back. India is on a completely different sort of tangent. In India, the asset class has overall seen a massive shift, right from angel investors coming on to large domestic VCs, right? So, for example, if Meesho goes public, the kind of money that you would see, being made is just incredible. Like Elevation Capital led the Series A. I think they would make a multi-bagger. I think Leo Capital, from memory, did the seed round, right? So Raj was a legend in this field, right? So the kind of money that will circle back into the economy, and people who made I think returns from startups typically do tend to give back. So you'll see a lot of these guys also recycling money and pools of capital into the ecosystem. We did invest in some companies in Pakistan as well. If I was to just give you, we've invested in some in Bangladesh as well as Pakistan, right? Early stage. I think there the challenge in those two markets has been overall macro issues which the countries have faced, especially recently. Political instability has resulted in a lot of external capital not coming in as anticipated, as a result of which follow-on raising has been particularly challenging. At the same time, some of the markets are not structurally sound for ventures thus yet. So we are taking sort of a fresh look in terms of Pakistan and Bangladesh, which was also part of our earlier strategy. Right now, most of the focus is on cross-border businesses. So if you're an Indian business looking to build for India to Asia, India to the world, if you're a Southeast Asian business building for the entire region, right, or if you're a business in Hong Kong, which is so you have to look at trade corridors also, right? If you were to, when we look at businesses, we also look at sort of macro themes. So a lot of trade right now, if you were to look at data, is happening between China and the Middle East, right? So as a result of that, you're seeing lots of startups which are also building for that particular corridor. Trillions of dollars are flowing through, right? So for example, a lot of investing is happening from China into the Middle East for construction. Now when that starts happening, you will start naturally seeing in the Middle East construction SaaS companies coming up and construction automation companies coming up, because construction as a sector historically has existed, but it's actually seeing a lot of boom and innovation coming in from China. So it really depends on the kind of trade corridors that are doing, and then a lot of capital eventually flowing to solve these specific problems. I know long-winded answer and I digress, but yeah, that's what my thoughts are.
Got it. And you speak with a lot of founders and invest into a lot of founders in early stage, but are there any product or strategy mistakes you see founders repeatedly making, which listeners, they're listening to it? What advice would you give to them?
Oh, I think the most important thing is finding the right founders, right? The right starting team, right? I think for me, I think that has been the biggest learning. If you can find someone who is A, complementary to you, right? B, has the same I think work ethic, same alignment in terms of vision, right? And understands the kind of effort that it takes, right? I think finding the right founder is probably, or the co-founders team, right? I think that is the most important thing that we keep on seeing. In terms of strategy, again, I'm a big believer of resource allocation, right? So ultimately, if frugal businesses, boring businesses, which have clarity on what the potential spend can be, ultimately end up, potentially surviving, right? As the saying goes, cockroach businesses, right? So those businesses which can potentially try and strive, be frugal, and keep a tab on funding, I think that really helps, because frankly, anyone who's seen the cycles over the last couple of sort of years, maybe the last decade, right? Capital into this asset class is it's a mix of ups and downs, right? There are so many factors that are flowing. So, and eventually for an early stage founder, you have to start fundraising, earlier than anticipated. So I think anyone who understands the expenses is a lot better. And going back to the learning is, if you're planning to raise funds, don't start when you're 6 months of runway. Start when you're 9 months of runway, right? I think that also is a very sort of important learning, because ultimately it also really impacts your ability to have a view on how to plan your business forward. If you're raising from a large fund, they might take a little bit more time to do due diligence. Sometimes holidays kick in, sometimes something else changes, and then that changes your outlook. So I think that is important. So to summarize, having a good sort of understanding on your expenses and planning better. And third, I think the fundamental question: should you hire 5 junior engineers who can do the job, or hire 2 senior engineers? I think that's not a sort of a question that I would have thought was very important maybe 12 months ago, but today it is very important, right? That because the kind of initial engineering that you're doing has a massive ripple effect as you go and you build a business. Because if your product requires rewiring 3, 4, 5, 6 months down the line, then you realize that, okay, you're back to square one, you got to build, you got to change, which then again sets you back. So yeah, I think trying to understand the mix of intersection of team and I think expense management is what is extremely critical.
Correct.
That's why Gujaratis are the best businessmen, right?
They are. Gujaratis, Marwaris, absolutely.
Yes.
Abbas, I quickly want to do the top 3. What's your favorite business book, or it could be a podcast or newsletter?
Yeah, so I'm not a big reader myself, but yeah, I'm a massive podcast listener. Obviously,
nice.
That's how I came across what you're also doing. So you've been doing a fantastic job, and
awesome.
Thank you for doing everything that you do and for sort of sharing all the knowledge. So in terms of podcasts, again, 20VC is something that I've listened to through the last couple of years. I think Harry's incredible, and I think the way he's also tried to not only talk about venture, but at the start of every pod, how he talks about his companies just shows that how passionate he is. I think that passion and that obviously the insights that he shares is unique. So 20VC is something that I listen to. I've listened to a lot of podcasts. I think I'm a product of all of the good podcasts which are out there. So nice. Neon's done a great sort of pod over the last couple of years as well. Jiraj has done great things. He's managed to get very interesting guests as well. So I think lots of interesting sort of podcasters out there sharing fantastic knowledge. I, just to answer your question, get most of my sort of learnings and sort of ideas from the more arty things. So I'm a musician myself. I actually do think a lot about how is art a reflection of society, or society a reflection of art, right? So if you were to, for example, look at look 10 years ago, most of the music was being made by bands, right? A team of people, right? And if you were to look today, most of the music is being made by individuals, right? If you look, most of the artists are individuals. Right? So that's the same thing we are seeing in business building as well, right? So if you were to look at it, earlier businesses were being built by larger teams, and now if you were to look at it, teams are getting smaller and smaller. So yeah, again, a lot of it is a reflection of how I think the parallels of art align with business doing. So, and sorry, the other 2 questions I forgot.
No, absolutely. We'll put down in the show notes about the podcast. But if you could go back in time when you started your career in venture capital or angel investing, what is it that you would do differently?
I would start earlier.
Yeah.
I would definitely start earlier. I think I should have started a lot earlier and gotten my learnings in place a lot faster if possible. I think that would have been the most important thing. Other than that, for us, we have been building sort of a venture capital. We are a startup, if I can call it, right? We are a venture capital startup, right? So For us, we're still in the 0 to 1 journey ourselves. That's how I like to put it. There's a lot to be done, right? So I think if we could have got a head start earlier, I think that would have made our life a lot easier. I think over and above that, the biggest sort of insight or thing that I could have done differently was to move faster, right? I think, always want to do more, and how do I get to do that a little bit better is the question.
Correct. And do you have any favorite online tool, for example, Gmail, Slack, Zoom, ChatGPT?
I'm a massive believer in Anthropic. I love it. I use Claude. That's why we invested in the company as well. So we invested in the company in Series B. So I think the product is phenomenal. Yes, so I use Anthropic. I use Perplexity. I use Grok. I use a bunch of them. I started using Gamma also now for presentations. We recently invested in a company called Golpo, which basically takes any sort of video and converts it into sort of an explainer, any document and converts it into an explainer video. So I think that's a tool also that I've been using a lot. Again, if I tend to invest in a lot of companies that we use and we relate with problems that we face.
Correct. We'll put down in the show notes. Aabhas, what's the best way people can reach out to you and know more about MyAsia VC?
Oh, just drop me a line. Aabhas at MyAsiaVC. That's AABHAS at MyAsia, which is MyAsiaVC.com. Just drop me a line, or you can reach me on LinkedIn. Always happy to have a conversation and get thoughts, feedback. And if there are any other insights on how to think about venture differently, let me know. I'm all ears.
Correct. We'll put down in show notes. Aabhas, thank you so much for taking your time speaking to us. I really enjoyed my conversation with you.
Thanks, Adnan, man. Thank you for having me, and all the very best.